lately the VIX has been pummeled. But what Garner likes in this chart is the Commodity Futures Trading Commission's weekly commitments of traders report. That's the COT, okay, which tells you what certain types of investors are doing with the VIX futures. What we care about here is the large speculator category, money managers, because it can give us some insight into when a trade may be too many right or it may be too crowded. Keep that thought in your mind. Right now, the VIX future speculations are net short by about 155,000 contracts, not far from what Garner would consider to be an overheated short trade at around 170,000 contracts. See, 170,000, we'll put it up here, okay? We'll keep all these. These are all important, so I don't want to. I know there's too much here, but this is really important because why does it matter? Because in the past, both the VIX and the S&P 500 have a habit of reversing once speculators start shorting the VIX futures too heavily. When the VIX spikes, the S&P tends to get crushed. All right, so you can see that, in other words, if this were to go back up, then the S&P would go like that, all right? Now, well, how about the S&P 500 itself? Take a look at this longer-term monthly chart of the S&P 500 December E-mini futures. That's a key contract everybody watches who trades the futures. In the short run, Garner thinks bullish seasonal patterns and optimism should be able to carry us higher. But if we rally much further from here, the relative strength index, and that's down here, RSI, okay, that's an important momentum indicator, will shift into overbought territory, suggesting that we'll be due for a pullback. Right now, the S&P is just above 3,000, okay? So keep this in mind. This is where it is, all right? Garner's is expecting a ceiling resistance at 3030 or 3150, 3,150. This is the appropriate ceiling. Anywhere somewhere in between, maybe. Her focus is on the 3,060 to 3,090 area. It's possible we get a short squeeze here, okay? A kind of bull trap move that tricks you into thinking everything's okay. That's what some people thought was happening today. If that ceiling holds, Garner says you want to be prepared for a sell-off, possibly for a severe one. So in other words, if we can't take this out, she wouldn't be surprised if we get a pullback down to the S&P's long-term floor, okay, of the 2,500s. Get this, it'd be a hideous move, but it wouldn't negate the bull market. However, if the S&P breaks below the long-term, well, then Garner thinks a plunge under 2,000. Under 2,000 could be a real possibility. At the moment, though, she still considers that a pretty low probability outcome. So she thinks it goes to here, but if that doesn't hold, then she thinks it can go to here.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.